everybody. Kenneth Travis here with my friend and partner Shane Kidwell with the LO. Actually, it's the lowdown.
Lowdown.
It's the lowdown.
Hey, if this wasn't live, we would do this again.
Talking about fumbles, my friend.
Oh man, like the Dallas Cowboys.
Yeah, man. So welcome everyone. We're here to give you the lowdown and what's going on in the mortgage industry. And let me first start off by saying, for those that are watching, for those that are streaming this live, and you may see this pop up, man, if you got any questions about what we're talking about, or you have any comments, commentary, anything that you want to share with us or ask, just put it in the comments below, and we're more than happy to bring you in on the conversation and have you share your perspective, question, and or content. So take us away, Shane. What you got, my man?
Well, dude, first off, this is going to be a shocker to you, Ken, but we're going to talk about interest rates.
Oh.
So several different, news outlets are talking about rates and whether rates are going to stay low. And I think one of the things that would be good to talk about is not what we think rates are going to do, but what are we communicating to our customers? Because right now, you have somebody who calls you up and they're like, hey, KT, thinking about refinancing, man. What are rates going to do? So what are you saying to that? How are you navigating that conversation?
Are you asking me my opinion on that?
I'm asking you what you as a mortgage professional are telling your consumers. I think that's a good conversation to have, right?
Yeah, for me, man, it's, because we have it's like drinking out of a fire hydrant. I don't know if any of you guys have tried to drink out of a fire hydrant. It's hard, or it would be hard, but imagine.
It's unsanitary, especially with COVID. So don't do it unless you're in East Texas.
Yeah, so it'd be very hard to do. But I think the reality is that when people reach out to myself or my team and they say, hey, I'm thinking about refinancing, obviously, if anyone that's got an interest rate at a 3.875 or above is a really good candidate to refinance and to save money. And so we would have our traditional, make sense of the transaction conversation with our client to get them to say yes. But it's really a bigger conversation than that for me. Okay. And what I like to say and or teach is, like, I don't have time to mess around with clients, Shane, that aren't like ready or motivated or see the value, like, without me having to sell them on it. Right. Now obviously we're all giving competitive rates. In my opinion, I think most people are giving competitive rates, but for me, it's a bigger picture than that. And in our industry right now, we have a huge capacity issue. Right. And what I mean by capacity issue, and this is what I say to people, and I usually take them back to March, Shane. Like, I go back to March. I say, hey, you remember in March when you heard about the Fed dropping rates to 0%? And they're like, yeah, I remember that. And I said, and even a lot of consumers thought, oh my God, interest rates are 0%. Well, really, rates actually went up. Like, did they not? They went up. And they went up because everyone was in the banking industry was freaking out because they didn't know what was about to happen. You had three things going on. You had the pandemic that was really beginning, right? You had unemployment that skyrocketed because of the pandemic. And then you had low interest rates already. So with those three things going on in the marketplace, dude, you had a lot of people that were holding paper in the book of business. Now, basically, the value of it, so it was worth $1 billion. Now it's only worth $500 million. And everyone's ability to loan money, their lines of credit basically got cut in half. So everyone in the industry said, hey, we're going to keep originating loans. We've temporarily kind of shut everything off. Everybody's rates kind of jumped up a little bit not entirely, but we've seen it, right?
Yeah, there were a couple weeks there where, lenders were shutting down, and a lot of the guys who've been around the industry back in the day were starting to like twitch like it was 2006 again, right?
Oh, yeah.
Like, are we shutting down? You think these things are going to go down? I'm like, no, man, like, give it time. I mean, there was uncertainty and there was fear. And
people were buying time in the industry. It's just where my opinion.
100%. Yeah. I think to your point that the capacity thing is a really good conversation because you got it. So people are saying, should I refinance? Right. Well, we're using information. We're using MBS Highway. And if you're not on there, they've got some really good PowerPoints that you can copy, paste, repeat. And one of them talks about when we're going into recessionary times and understanding future markets. And I explain that to my consumer. And then I go to your point about the capacity. I'll say, is it a good time to refinance? Absolutely. It's an amazing time. I use the MBS Highway or I'll use Mortgage Coach, and I'll show them factually how it's a great time for them. Right. So I think I think it's the communication piece. It's using a tool, and there's other tools out there. Those two tools are just my favorites personally. Mm-hmm. And then it's educating them on why we had what we had happen, the uncertainty, the fear, where we think we're going, why we think we're going there. And to your point, man, like you were saying earlier, when we do that, people don't fight you on how long it takes to close.
Yeah, that's exactly right. And you're not, and it's, and we see turn times getting longer and longer and longer. And I just think taking the client from that initial conversation of, hey, back in March, this is kind of what we went through. And we were all speaking about, oh man, rates are really low. Everyone needs to refinance. And then rates started going up for a lot of people. Not everyone, but for a lot of people, rates started going up. Rates went up for brokers. And it was just, I think the industry was kind of identifying who they were in the marketplace. I think every mortgage lender out there was like, who are we in this marketplace with what's going on? And when you have governors speaking about forbearance is great and all of that, it rattled the market. It rattled the market.
Well, there was misinformation.
But today, don't you think we've kind of, I feel like we've leveled out. Pricing's so much better. Investors have kind of shook out all the, everything that needs to be shook out in terms of like being competitive in the marketplace. And what I see a lot of lenders doing, when I say lenders, these are like, we all represent different companies. A lot of us do, but our companies still have, they're selling these loans on the secondary market, most of them. Some of us are servicing. But at the end of the day, what we see happening is I see investors turning the faucet on, right? Meaning when I say turn the faucet on, they're turning it on and they're giving premium pricing and all this stuff. And then a week or two later, they'll turn it off and you'll see them kind of go away. You're like, oh, okay, that's a warehouse. That's a liquidity challenge, And so they just want to make sure they're not filling themselves up more than what they can.
100%.
Yeah.
100%. Well, listen, all right. So there was an article that came out by an awesome friend of mine in the industry. I've been using Mortgage Coach since I started back in 2010. Dave Savage wrote a phenomenal article about Quicken and Quicken's IPO and what it means for lenders. And there were a couple of key points in this that I thought were really good that I just wanted to really briefly touch on. Mm-hmm. It's amazing to think about, like Quicken really quickly, no pun intended, Quicken quickly understood that it was all about lead gen. Right? Like they didn't have an office sitting next to your real estate agent. And so they couldn't do this, we used to talk about breaking bread, the belly to belly. They couldn't do that. So they built an audience. And one of Dave's big questions, and I think really more of an emphasis and a point is, are you a lead gen machine? Are you generating leads at all? Do you understand where they're coming from? How many you're getting? And I know you've done, and we've all dabbled in online leads and building an audience. And at Next Level, we have a couple phenomenal classes on building your online brand, like being the mayor of your digital town. But I just thought it was a really good point because, a Navy SEAL knows if his gun has a bullet in the chamber, right? Like he understands everything about his craft. You know what I mean? Whereas in our business, a lot of lenders, we fumble into deals, we kind of fumble our way through them. We forget to lock. We don't really look at the markets. And like our consumer doesn't know because they don't understand what we do. But there's no tactician out there. There's very few tacticians out there that are methodically going through the process. And Quicken has demonstrated through what they've done, just a tactician approach to generating and building an audience, right? Now, number two, I thought this was a really good insight. Their overall retention is 63%. What's incredible to me is it's 3.5 times higher than the industry. So like, pause for a second. So Quicken is retaining their customer 3.5 times more than you and I. Like, why is that, man? Like, where do you think that like loan officers fall down in that regard? Client retention, which to me, I hear follow-up.
I hear technology. Yeah,
I hear technology, right? Mm-hmm. And like Ryan Speltz, what up, brother? He's like, it's a marketing company that does loans. And that's 100% true. I agree with that. And listen, like you'll get a lot of these old timers like, man, that's, I'm going to just, belly to belly. I'm going to bring my value and my clients aren't going to care about the rate. And I'm not going to get on social media. And the reality is that's a dying breed, man. Like if you're not building a marketing presence, a marketing machine, you're going to lose. Your market share is going to continue to shrink.
Mm-hmm. Yeah, I would agree. And you know what, man, like, and I know 63% retention sounds like a lot. That's probably of what they've closed, right? So wouldn't you say that'd be 63% of the customers that they've actually finalized customers? Yeah.
That's not their lead gen retention. It's their closed loan retention, but still, it's still better than the industry.
Yeah, I had a client just recently say, well, we used Quicken before and we were going to use them again. However, you were highly recommended for us to call from our real estate agent, and that's the difference. We have boots on the ground, and that's the advantage that we have over these fintech type companies. And man, when you embrace technology and you like I went to this one website, it was called Better, I think it was better.com or bettermortgages.com. And dude, I just did it just to test it out to see what it was like, right? And I went through the entire process, Shane, and they approved me as I was filling out the application. Man, after I was done, dude, they called me on the phone. Then they sent a realtor to me. It was impressive. I was like, man, they did everything that we normally do that sometimes takes a day or two, right?
You did it in an hour?
Hours. They did it in like an hour. And I was very impressed with it. But it really forced me to level up and think about, okay, what part of my processes can I improve on from a technology perspective? Because at the end of the day, technology is great. I love technology. I know you love technology. You're way better at technology than any loan officer that I know in terms of, streamlining it and using it and teaching it and all of those things. But at the end of the day, there's still, in my opinion, a need for a human touch, because all of that technology isn't going to be a debt manager or a mortgage advisor to these clients. And now they're going to be able to cast the net and still get a lot of those fish in the net, right? They're very cookie cutter, right? But when people need like real advisement and debt management, dude, you have to have personal human touch. I don't care what they say. I don't care. People need it. Okay.
100%.
People have challenge credit. People have debt. People have things that where they want to get someone on the phone, have a specific conversation about their specific needs. And the technology isn't going to fill that void unless it's like artificial intelligence. And man, I don't know how far away that is.
I think at the end of the day, there'll always be a human.
Yeah.
But what we do as a part of the overall process is changing. It's morphing, right? And to Dave Savage's point, and I think Barry Habib has talked about this as well, is you're an advisor, you're a debt manager, you're doing annual reviews, you're doing these things to get it, like to reintegrate yourself with your client after you close. And when you do that, it's amazing how people are like, oh yeah, I do annual reviews. And I'm like, how often? They're like, not really very often, right? Yeah. Well, the reality is that if you took three things, you did three things really well after the deal. You did a 1 week follow-up, a 1 month follow-up, and a 1 year follow-up. And there was a different strategy behind each one of those, right? It probably take you 5 minutes. Hey, Ken, it's been a week since you closed. I wanted to send you some information so you know how to make your first payment. Hey, man, and I was sitting back reflecting on closing your loan last week. I can't believe it's been 7 days. Man, I really appreciate you and your wife. It was fun doing a loan with you and Allison. Hey, is there anybody else you know that like would benefit from our service? Boom, referral opportunity number one. Number two, month later. Hey, it's been a month. How's things going? Hey, I know a lot of vendors out there. Now that you're in your home, first time home buyer, you're realizing there's a lot of things you're going to need to do on your home. There's maybe some electrical work, some plumbing. Hey, by the way, like I know you're busy working 2 jobs. You may need a landscaper. I've got an amazing network of people. Is there anybody I can introduce you to? Opportunity number 3. It's been a year. Hey, my job is to make sure that I'm educating you long-term on your financial picture. Wanted to show you an annual review on your mortgage, right? If you do those 3 things, Quicken ain't going to beat you, right? Now, if you're a 1% interest rate higher, of course they will, right? Like we got to be fair, and I think we are, and we mentioned that. So I thought that was a really good point Dave had. And then just last in this article, talk to just about the Rocket brand. So it's not just Rocket Mortgage. Now they have this whole Rocket brand with all these other technologies and integration. You brought this up already, but although technology won't replace the human, it can supplement the human. And I know you and I have talked about like HomeBot, great technology to supplement the human, right? It's sexy. It does everything. Like you don't have, you just turn it on and you let it go, right? I just think that it's really important for everybody to understand out there. Like, I know you're overwhelmed. Like, we get it. We're overwhelmed too. Like, we're working more than we'd like to work, but the technology can help you have like the octopus tentacles, man. Instead of 2 arms, you can have 8.
Yeah. That's good. That's good stuff, bro. I mean, that's just, it's good stuff. I think that, to summarize it, what we're saying is educate your people, man. Educate them on the front end about what's happening in the marketplace, why rates are so good. Do we intend on them staying this low for some time? I think so. You know, there's, I've heard a couple of different suggestions on that. I've heard through November. I've heard through January. I've heard through the end of 2021.
That too.
And so regardless to what you believe, I think it's important for us to get it while the getting's good. And we're just, we're going to have to, we're just going to have these conversations. We're going to have to make sure that we're educating and letting our clientele know that, hey, we know what's going on in the marketplace. Here it is. This is what we're doing. Buy yourself some time, because, man, when you sound educated and you sound smart, because you are, and you script that out the right way, man, the clients will give you 60 days to let you close, right? Not that you need 60 days. Me, I mean, if I give myself 45 days on refinances, I can make that a reality in my marketplace, right? I just lock them at 45 days just to lock them at 45 days, but if we get it done sooner, great. If not, they're in no hurry. And this is the other thing too, Shane, although refinances are such a huge part of of a lot of loan officers' business right now, man, don't forget your realtor partners. I'm just telling you, like, this is a great time to start reaching out to those partners and staying in front of them on a consistent basis, because I think some LOs have probably abandoned those relationships, not because they don't care, just because they're so busy, because there's low-hanging fruit right now. It's a really good time to build relationships, man. It's just such a great time. So
listen, I think we end with that point, because that is so money. And we put a banner up on the screen here, and it really parlays into that. If you feel like you don't have a strategy for following up with your people through navigating your day, like Ken is the master at owning his day. If you don't have a plan for owning your day, the playbook will get you there. Now, you got to do the work. So ain't nobody going to give you anything for free, and you're not going to be successful by watching other people be successful. But this playbook, we're going to give you a free copy of the playbook. Just text playbook to 484848. We'll send you a free copy. As you know, my good buddy Ken here would say, we love you guys. We appreciate you. Be safe out there, and socially distance unless you come hang with us, and then we're going to give you a big hug.
Heck yeah. We'll see you guys. Take care.
Bye, guys.